Welcome to World Business. In this edition, we examine the decisions, disruptions and dynamics transforming global commerce, from boardrooms to trading floors, from energy to AI. The markets may move fast, but we help make sense of the momentum.
Global stocks soared on Thursday as investors cheered Nvidia's market-topping earnings. Tech-heavy markets Japan, South Korea and Taiwan led the rally. In South Korea, the benchmark Kospi index was up 1.92%, while Taiwan's chipmaker TSMC's stock was up 4.3%. Japan's benchmark Nikkei closed up 2.65%. Markets in Japan were also assessing news that the Prime Minister's administration is reportedly preparing to pass a stimulus package. It would be the country's biggest since the COVID-19 pandemic. European shares also climbed on the opening. The pan-European StoXX 600 was up nearly 1% in early deals. Nvidia's blowout quarterly results and a positive outlook came at a critical time for investors. They've been rattled in recent weeks by fears of a global AI bubble. The world's most valuable company said it expected fiscal fourth quarter sales of $65 billion, and Nvidia's third quarter sales rose 62%. Investor focus will now shift to a long-awaited official US jobs report. It could sway expectations regarding the Federal Reserve's monetary policy verdict next month.
US officials are privately saying that they might not levy long-promised semiconductor tariffs anytime soon. That could signal delay for a centerpiece of President Donald Trump's economic agenda. Sources tell Reuters the administration is treading carefully to avoid reigniting a trade war with China, even after Trump promised 100% tariffs on chips back in August. Officials say triple-digit tariffs could still come at any time, but for now, Washington is weighing timing and scope. The White House insists there's been no policy change. Any delay would come as Trump faces voter frustration over high prices, with tariffs on chips potentially pushing up costs for electronics. Meanwhile, the Commerce Department has cleared exports of advanced AI chips to two state-backed Gulf tech firms. The approvals, tied to strict security conditions, cover sales to Saudi Arabia's Humane and the UAE's G42. They will each be allowed to buy the equivalent of 35,000 of Nvidia's cutting-edge Blackwell chips for massive data center projects. The announcement coincided with a visit to the US by Saudi Arabian Crown Prince Mohammed bin Salman and represents a big show of support by the US in the two countries' AI aspirations.
A China's Commerce Ministry spokesperson said on Thursday it welcomed the Dutch government's decision to suspend its seizure of Chinese-owned, Netherlands-based chipmaker Nexperia, but there is still a gap from a complete solution. Speaking to reporters in Beijing, the spokesperson said the Netherlands is responsible for the current turbulence in the global semiconductor supply chains and urged the Dutch to swiftly resolve the issue. A move by the Netherlands to step back from taking control of computer chipmaker Nexperia was welcomed by China on Wednesday as a first step in the right direction to easing chip supply shortages, following talks between the two governments. However, China said that the move fell short of what it had hoped for, namely a withdrawal of the administrative order that triggered the Dutch intervention. The Dutch government took control of Nexperia on September 30th, saying the move was necessary to prevent the company's former CEO from moving European operations to China from its current base in the Netherlands. In response, Beijing halted exports of Nexperia's finished products on October 4th, a measure it has since partly relaxed.
New data from the China Machinery Industry Federation shows a major surge in the country's output of industrial robots as demand from downstream manufacturing sectors continues to rise. According to the group, the country produced 595,000 units in the first 3 quarters of this year, surpassing the total for all of 2024. At a Lenovo smart manufacturing plant in China's tech hub, Shenzhen City, the robots are debugged, put through a series of final tests, then packed into padded boxes and shipped to locations across the country. Streamlined processes at this factory and at others, together with the region's mature industrial chain, have helped robot manufacturers meet robust demand from the automotive, electronics, and new energy products sectors.
China is now the world's largest manufacturer and consumer of robots. The global robotics market is projected to exceed $400 billion by 2029.
Chen says embodied intelligent robots are expected to emerge as a key driver in the segment and predicts they'll account for more than 30% of the market share going forward.
A Waymo Zeekr robo-taxi model, developed with Chinese automaker Geely, was seen charging on Wednesday at a public charging station in San Diego, California, during testing before the driverless service begins its expansion into the city in 2026. Waymo announced in early November it will launch its robo-taxi service in Las Vegas, San Diego, and Detroit next year, marking its biggest geographic expansion yet. The Alphabet unit will also start driving its new Zeekr-built vehicles alongside its existing Jaguar fleet, it added. The new Zeekr model is designed specifically for robo-taxi use cases and will be rolled out gradually as the company expands its service. Companies like Waymo, Tesla, and Amazon's Zoox are investing billions into self-driving technology. Tesla launched its long-awaited robo-taxi service earlier this year, while Waymo already operates driverless services in Phoenix, San Francisco, Los Angeles, and Austin, and has completed more than 10 million trips. Waymo plans to launch the service in Las Vegas next summer, while in San Diego it is working with local officials and first responders to secure deployment permits. In Detroit, the company said its winter weather testing in Michigan's Upper Peninsula has strengthened its ability to operate year-round, where it has long maintained engineering operations.
Spain's parliament will investigate Meta for possible privacy violations of its Facebook and Instagram users, the country's Prime Minister Pedro Sanchez said on Wednesday. The investigation stems from international research that found Meta had used a hidden mechanism to track the web activity of Android device users, Sanchez's office said. Meta did not immediately comment. Spain's investigation into the US tech giant threatens to further sour relations with Washington after Madrid failed to meet NATO spending targets. Washington has earlier criticized the EU's Digital Markets Act, which seeks to curb the power of big tech, and the Digital Services Act, which requires large online platforms to tackle illegal and harmful content. Spain's government said Meta may have violated various European Union laws on security and privacy, including its General Data Protection Regulation, the ePrivacy Directive, the DMA, and the DSA. Meta, which is led by US billionaire Mark Zuckerberg, will be called to testify before a lower house committee, it added. The company has had several legal clashes with the European Commission, which in preliminary findings in October said Meta and TikTok had breached their legal obligation to grant researchers adequate access to public data. The Commission fined Meta €798 million in 2024 for abusive practices benefiting Facebook Marketplace, while in July last year, it charged the company for failing to comply with the DMA in its new pay or consent advertising model.
The Dutch government said on Wednesday it was suspending its intervention at computer chip maker Nexperia after what it said were constructive talks with China over a dispute which has led to shortages of chips needed by car manufacturers. The Dutch state took control at Nexperia on September 30th, saying the move was needed to prevent the company's former chief executive from moving its operations to China. Beijing responded by halting exports of Nexperia's finished products on October 4th, a measure it has since relaxed. Dutch Economy Minister Vincent Karamanz said on Wednesday that suspending the government intervention represented a gesture of goodwill, adding that talks will continue. Nexperia is a major supplier of basic computer chips to the car industry, and shortages of its chips following the dispute between the Netherlands and China have threatened automotive supply chains and led to production slowdowns and halts.
Finnish petrol station operator T-Boil, which is owned by Russian oil major Lukoil, said on Wednesday it is preparing to shut down its operations as fuel runs out amid US sanctions against its parent company. T-Boil said in a statement that stations will close in phases once fuel stocks are sold out. The United States last month hit Lukoil with sanctions over Moscow's war in Ukraine, and the Trump administration on Friday gave clearance to potential buyers to talk to the Russian company about buying its non-Russian assets. Tuboil has 430 stations in Finland, according to its website, or roughly 1/5 of the Nordic country's 2,250 stations, according to a 2024 report by an industry group. Tuboil had on Monday said it expected Lukoil to sell the chain as part of the Russian group's ongoing effort to sell foreign assets. Finland's Financial Supervisory Authority last month said banks and other Finnish institutions subject to its regulations should exercise caution in dealing with Lukoil and companies directly or indirectly owned by it.
The Allen Institute in Seattle has released an artificial intelligence platform that lets scientists search and compare massive brain datasets as easily as looking something up online, the Institute said. The Brain Knowledge platform pulls together data from humans and animals, but its backbone is an unusually rich set of maps of the mouse brain. Over the past 2 decades, Allen and collaborators have built 3D atlases that chart where thousands of genes turn on across the mouse brain, how different cell types are distributed, and how brain regions connect and process visual information. The work brings together researchers from the Allen Institute in Seattle, Japan's Riken Center for Computational Science, Fujitsu, and other collaborators who helped run the mouse brain simulations on the Fugaku supercomputer. Researchers can now use the new tool to line up their own mouse experiments against those reference maps and against studies from other labs, allowing apples-to-apples comparisons of brain cells, circuits, and disease markers. Scientists say mouse brains are a crucial testing ground because they share most of their genes with humans, but are far easier to study in high detail. Previous projects have already created cellular resolution, 3D reference brains, and whole brain cell type atlases covering millions of mouse cells. Feeding those datasets into one AI system could speed up work on conditions from dementia to psychiatric disorders and help drug makers test ideas more quickly. The Institute said that current supercomputers are still not powerful enough to simulate the human brain in the same detail, but that could change in the coming decades.
Etihad Airways on Tuesday laid out a series of deals that will add 32 wide-body jets to its growing fleet, lifting targets for fleet size and passenger numbers by 2030. The Abu Dhabi carrier is buying 6 Airbus aircraft, and 9 will be leased from Dublin-based lessor Avalon as part of the order, which was announced during the Dubai Air Show. In recent years, airlines have struggled with aircraft deliveries amid increasing demand, as Boeing undergoes multiple crises and Airbus struggles with supply chain challenges. The airline is set to start receiving the A330s by 2027. Etihad is boosting its fleet and network to better compete with bigger Gulf carriers as Abu Dhabi diversifies its economy away from oil betting on sectors such as tourism. It now aims to fly 37 million passengers every year by 2030. It had previously said it would target 30 million passengers with a fleet 170 aircraft by the same year. Etihad also ordered 7 Airbus A350-1000, bringing its total for the type to 27 planes, and said it would add 10 A350F freighters to its fleet.
A French court rejected on Tuesday a case against Nestlé's Perrier mineral water, brought by a consumers group who had demanded the sparkling water be withdrawn from markets. The court said there was not enough evidence of an urgent health risk or a clear violation of the law to justify such a drastic measure. Consumer group UFC Que Choisir had sought an emergency intervention over what it alleges is deceptive marketing of the brand as natural mineral water. The move was the latest development in an ongoing scandal surrounding the brand, since French media reported last year that Perrier and many other mineral water producers had been illegally treating their water to prevent contamination. An inquiry commissioned by France's Senate found in May that the French government had covered up the use of treatments for years. Nestlé said it regretted the use of the treatments and has since stopped using them, switching instead to microfiltration, which it says is safe and does not alter the mineral makeup of its water. However, the consumer group argues the microfiltration is another kind of treatment that has not been approved by authorities, and given its use to remove contaminants, suggests there could be a potential health risk. Famous for its teardrop-shaped, green glass bottles, Perrier has been produced from spring water in southern France since the late 19th century and marketed worldwide. Nestlé's Waters division has owned the brand since 1992.
The European Union set import quotas on Tuesday on alloys of steel containing manganese or silicon to protect domestic producers against a surge of cheap imports. The measures will last for 3 years and consist of country-specific quotas per type of ferroalloy, limiting the volume of imports that can enter the EU duty-free. Imports beyond the quotas may enter without duties if prices exceed established thresholds. If not, a tariff will apply to bring the final price up to the threshold level. The European Commission, which carried out an investigation, said that imports increased by 17% between 2019 and 2024, and the market share of EU producers fell to 24% from 38%. It concluded the surge of imports harmed EU industry. Europe's sector body said EU companies were struggling to compete with exporters from China, India and Kazakhstan that sold at significantly lower prices.
And that is all for World Business. As the markets close and deals unfold, we'll keep following the trends that matter most from all of us here at A News. Thanks for watching.